everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today, I'm going to do this special little video. I felt like sharing it. And this is pretty much how I short. This is my technique. This is not the only technique. This has proven useful for me and profitable. And a lot of these lessons I learned the hard way. So I want to share with you today how I short. Right now we're looking at basic attention token. BAT is the ticker, and traded against a US dollar. And we're on the 5-minute chart because this is not going to be just go back to my premise on trading. If you're subscribed to the channel, you'll know I like to be in and out. I do not like to expose myself for too long on leverage. If I'm going to do trading, I'm going to take a significant amount of leverage. I want to be in and out. I want to trade my plan and plan my trade and, vice versa, all that stuff. But I don't want to dilly-dally. Okay, so right now we're looking at BAT. You'll see that let me count it out for you. I'm looking at it and the count's in my head, but since I'm presenting this, let me draw it out. So I've counted the 5 waves up. I actually longed this correctly and took profit up here. Okay, and we have our 5-wave Elliott wave analysis, or 5-wave Elliott impulse up. Okay, I hope this isn't too messy. I know the 5-minute chart's not the cleanest, a lot of noise. Anyway, I took profit up here. Now I want to short the same coin. One of my things on trading is you're not a complete trader if you can only go one way. Okay, it's kind of like playing basketball and you're right-handed and you don't have a left hand, or you're left-handed, you don't have a right hand. You need to know how to do both. You need to be comfortable in doing both. And once you have that confidence to go both ways, then you're dangerous because you can make money either way. Okay, so let's first define the parameters. Okay, so I drew this out. I put my Elliott wave count here. I have these 2 little lines showing the boundaries of this Elliott wave impulse. It's basically my channel showing support and resistance, diagonal support and resistance of this motion. And I'm going to use this while shorting, okay? So we all know that after 5 waves up or 5 waves down, you get an ABC correction. Since we had 5 waves up, you're going to have this A, B, C. Okay, we can get a ABC flat, we can get an ABC zigzag, we can get a running flat, we can get all manner of things. Okay, so one thing you don't want to do, rule number 1 on shorting, is you do not want to short what you think is the top of the 5th wave. Don't do that. Why? Because you may get taken out by that B wave if it's a running flat, or if it's, like a strong zigzag. Okay, you don't want to try to short from up here. You want to wait. One of my rules, and I write down my trading rules, and these rules are learned the hard way, meaning I lost money, so you don't really forget them. And I encourage everybody, write them down. If you're serious about trading and you want to create a system, write them down, stick to them. They're rules, not suggestions. If you want to be profitable, you want to be consistent. So one of my rules is I don't short unless I only short rather at the top of the B wave. I try to catch the top of the B wave. Just like you don't buy green candles in general, and I actually do sometimes, and I have a video on that. But in principle, you don't want to buy green candles, you want to buy red candles. Just like, so the same principle in shorting, you don't want to short red, you want to short green. So I'm going to wait, and let's draw the ABC correction out. So, and again, we don't know what it's going to look like. You have to know that you don't know. If you think you know, then it's a great way to get wrecked. So definitely wait. So let's say, sorry, 1 second. Let's say we get something like this. This is possible, in which case the B wave would not be higher than our 5th wave. but it can go up here, and this can go like this, right? It can go all manner of ways, right? Corrections are some of the most complex things. Complex. It's one of the hardest things in Elliott wave analysis, corrections, okay? Because there's a million different corrections, way harder than counting the 5-wave impulses. So don't assume you know what the correction is going to look like. Just wait for it to play out. Use your stochastic RSI. Here you can see we're bottoming out on the 5-minute. We're starting to round out, which pretty much means that we are close to reaching the end of the A wave, okay? And I think that we're going to hit this, right? Use this kind of support, use this as support for the A wave. So we're going to probably come down here and then go up for the B wave. And a lot of times the B wave is higher ever so slightly than the than the top of 5, and it creates a new high, and it looks kind of like a 3 peak in on some time frames. So basically, yeah, you just want to wait for that B wave, wait for that B wave to come up. And what you're going to do is you're going to see, if you use stochastic RSI or MACD, whatever, you're going to see it come up, wait for it to cross, just like you see here. The red line crosses over the blue, red line crosses over the blue. It's a lagging indicator, but better late to the party when trading than early. You want to come late. Come late to the party. You don't want to be first, because sometimes they're nasty surprises for whoever's first. Wait until it crosses, the red line crosses over the blue right here. Then you confirm on your way down. Maybe go to the 15-minute chart and confirm that that's the case, okay? And once you start moving down, then you open your short, okay? And then from that point, to measure the distance you're going to go down, this is what I do. I use this principle. Corrections occur down to the 0.5 mark, typically, in my experience. And I'll give you an example. Let's just look at this right here, okay? So right here, that's a 5-wave up. This is 5 waves up, and then this is ABC correction down here. So this is the start of a 5-wave Elliott wave impulse, and let's count it out just for those of you who don't see it. The more you look at these things, the more you'll see them. You won't even need to like draw this out. It's fine if you do, but you'll start just seeing the patterns. Okay, I hope everybody sees that, right? And then the ABC correction here was like this. A, B, C. So you got a zigzag, right? Hope you can see that. Hope it's not too small. Let's zoom in. So you got 5 waves down, 3 waves up, 5 waves down. Okay, and that was your ABC correction. Your B wave in this case did not come higher than the 5th wave. That doesn't mean just start going ahead and trying to short the top of the 5th wave. Wait, because there is such a thing as a running flat. There are such things as the B wave going higher. Just in all prudence, you know what, you're missing out on a few points of a percent. I wait for the B wave. That's my rule, not financial advice. You can do whatever you like, obviously, but I like to wait for the B wave because that's literally the last sort of strong impulse up, right? So I like to be prudent and wait for that B wave. But here, my point in showing you this one was what? We correct to the 0.5 or thereabouts. And so if we take our fibs from the top of the 5 all the way to the bottom of the start of 1, where does that C wave hit? The end of the C wave hit. Do you see that? Right there, almost spot on the 0.5 fib. So basically, that's the correction. It corrected halfway, and then it continued up. So maybe you want to set your take profit a little bit above. In this case, let's see. Let's measure. let me take the magnet off. In this case, we're 0.1% from the 0.5 mark. So that's just, what I like to use. And obviously, you want to be conservative. A lot of times, as soon as the C wave's over, boom, you're back up for the fifth wave. So if you miss that take profit and you haven't you haven't trailed your stops, meaning moved your stop loss lower and lower and lower into profit, you could miss it altogether, and the Elliott wave, 5-wave Elliott waves can run on you, and you can lose money or get stopped out for little to no profit. I've done it all. I've done it all. So this is from experience. I like to do, be conservative, maybe halfway between the 0.5 and the 0.618, and then take your profit and move on. So that's just how I short. That's my method. I hope that was useful, instructive, or informative. And I'd love to hear you guys' comments. So right now you see we're getting that cross where the blue line is crossing over the red line, which means we're starting our B wave. Okay, our B wave is likely to come up here, but it's possible it can come up here, right? So you never know. Again, my rule, my personal trading rule, wait for the B wave to complete before entering your short. And hopefully you counted it right, because this is all based on the assumption that your count is correct. If your count is off, then you don't get wrecked, but you lose. Okay, and make it so that when you're trading, you manage your risk. You basically define your risk. So let's say you're not going to be 100% right, but when you lose, you don't blow up your account. Okay, so set a stop loss. Always set a stop loss, and basically put it at the point where if your idea, what you think will happen, is invalidated, then it no longer works. For instance, for me, this trade or this setup, this count is invalid if, for instance, let's say the B wave comes up to here or something like that. So this is where I would set my stop loss, because if it goes up to here, or let's say maybe not there, maybe up here, the B wave, there's no way the B wave's coming all the way up here, right? So that would invalidate my trade. So I'm setting my stop loss up there, and then I got to check, okay, how much does that mean I'm losing on the trade? What percentage, what's the dollar amount, what am I comfortable with? Always define your risk. You never want to be caught unawares. You never want to trade and say, damn it, you're never going to be right 100%, okay? You're going to lose some, but when you do lose, be comfortable with what you lost. Even if it sucks, you know that, okay, I can trade another day. I hope that makes sense. I hope this is useful. This is all stuff I've learned the hard way. I'm not perfect. I'm still learning myself, but I want to share this, and I hope that you all benefit from it if you're trading. If you are trading, I have links to my Bybit referral, my Phemex referral, and I think KuCoin. I personally am using Phemex. I think this one's in Phemex. Yeah, I'm using Phemex for this trade, and I use Bybit sometimes. And what you should do if you're new to trading, you haven't done it before, please don't put in your own money. If you do put in very little, chances are you're going to lose it, because you're always going to make a lot of mistakes when you start. And once you learn, then you start getting consistent and having trading rules and sort of strategies for how to long, how to short, how to make entries, how to make exits. Then you start making money consistently. Then you can put in more money, right? But I don't want you guys to just put in a bunch of money, think that, because I saw some guy on crypto Twitter, he flipped 5K to like $1 million, and I'm going to do the same. I know how to chart. Charting's easy. Doing technical analysis is easy. Trading's another beast altogether. So hope this was helpful. Hope this was useful. Like, subscribe, share, and stay safe, stay profitable. I'll see you guys tomorrow.